Mahbub, start.
Ladies and gentlemen, a very good afternoon to all of you. It gives me immense pleasure to welcome you all to the Citybank Limited's Earnings Disclosure Q4 2021 web event. While scheduling the event, we attempted to choose the most fitting time slot during this holy month of Ramadan so that we could accommodate most of the participants, both from local and foreign vicinity and time zones. I am Safina Ahmed Tori, your host for the event, welcoming you all today. Thank you all very much for joining us. Today, we have here amongst us Honorable Managing Director and Chief Executive Officer of the Citybank Limited, Mr. Mashroor Arifin. Additional Managing Director and Chief Business Officer, Mr. Sheikh Mohammed Maroof.
Hello, good afternoon, everyone.
Additional Managing Director and Chief Financial Officer, Mr. Mohammad Mahbubur Rahman. Head of Credit Risk Management and Acting Chief Risk Officer, Mr. Misbaul Asif Siddiqui.
Assalamu alaikum and good afternoon to all.
And Head of Internal Control and Compliance, Mr. A.K.M. Saifullah Kausar.
Hello, good afternoon. Assalamu alaikum all.
As a bank, we take pride in engaging the investment community in our journey and believe in transparency and accountability in disclosing our performances and actions. The bank's criteria for success have always been not only the bottom line numbers, but also the milestones set towards becoming the most complete bank in Bangladesh. This success points to the sustained momentum of our banking business and to the success we are having in transforming our marketplace to meet the increasing sophistication and needs of our esteemed clients around liquidity, service, reliability, and mobility. And we have come this far diligently, following the mantra of service and trust with all the support of our community, team, and shareholders. With that in mind, we are gathered here today to present the contemporary financial position and forward-looking strategies of the bank. We shall start with our AMD and CFO, Mr. Mohammad Mahbubur Rahman, presenting the financial performance, followed by our Managing Director and CEO, Mr. Mashroor Arifin, addressing all of you, and finally end with a question and answer session. Before we proceed, I'd like to inform you all that we have opened our question and answer portal, which you can see at the bottom right corner of your screens. You may place any relevant question in the window during our presentation. We shall try our best to address them in our question and answer session, depending on the time available for the program. Ladies and gentlemen, I now request our AMD and CFO, Mr. Mohammad Mahbubur Rahman, to start with the financial performance presentation. Over to you, sir.
Thank you, Tori. Assalamu alaikum and good afternoon and welcome to our earnings disclosure for 2021. Like before, we have arranged our presentation with a major component of the balance sheet, along with the related income component of the income statement, so then you can actually compare our business performance and our earning capacity side by side. So first, let's start with the major component of the asset side, that is loans and advance. You can see that we have grew by 7.1% from 2020. At the end of 2021, and the loan and advance stood at 288.3 billion taka at the end of 2021. But on an average, actually, our loan growth was higher than this growth rate. Our loan growth on an average grew by 10.4%. When the country's credit growth was at 8.4%, our loan book grew by 10.4% on an average. But on the other hand, interest income actually declined in 2021 by 10.5% from 23 billion taka to 21 billion taka. And we all know that because of the excess liquidity situation in the market in 2021, the interest rate was quite depressed all through the year in 2021. And because of that, you can see that our yield on advance actually fell from 8.4% to 7.1%. Actually, it would have been worse if we didn't have actually diversified portfolio like small microfinance, SME, retail credit card. With the combination of diversified portfolio, we could manage this 7% because interest rate of large loan was even lower than this average rate. Here you can see that how actually we are managing our strategy in last few years. You can see that we are consistently growing in last few years with loans and advance, and one of the strategy of the bank is to improve the diversification in our loan portfolio. Here you can see that in 2028, when our corporate used to contribute 60% of the loan book, which came down to 48% in 2021, and it has been taken over by SME, medium and small, retail and commercial. So which are giving actually better yield. And though actually interest rate is capped, except credit card interest is capped for all segments, but even though these segments actually enjoying higher rate compared to corporate. And through this diversification, we are managing risk and also managing our yield as well. Now the deposit is definitely the major component in the liability side of the balance sheet, which grew by 10.9% in 2021. We ended with 282.2 billion taka equivalent of deposit in 2021. And here you can see that because of our also several strategy, we could actually manage our interest expense and very efficiently, which declined from 14.8 billion taka to 8.7 billion taka with 41% decline. Actually, though actually the market liquidity situation has helped us, but because of our long-term strategy, we could actually basically manage this cost of deposit, and the cost of deposit came down from 4.6% to 2.5% in 2021. And yeah, here you can see that our deposit is growing consistently over the years, and also the strategy that we have been talking about, we are improving our current and savings position. Here you can see that in 2018, our current and savings was 36% in the deposit book, which improved to 46% in 2021. And in this slide also you can see that how our current and savings accounts number and volume is increasing over the years. It was around 850,000 in 2018, and it increased to 1.4 million number of current savings account, and already it has crossed 1.5 million as of today. And in terms of volume, I already have said that it was 73 billion taka in 2018, and it increased to 129 at the end of 2021. Because of our strategy and focus in retail, internet banking, our women banking, and recently launched Islamic banking, and along with our wide distribution channel like agent banking, we are actually managing higher growth in current and savings accounts. And this has become a core strength of the Citybank. And with this strength, we are managing our liquidity as well as cost of deposit. Here actually you can see the spread, how actually it is moving in last few years. Definitely yield is decreasing. You can see from this graph, which is shown in green color. Cost of deposit is shown in red color, red line. So it is, so we are also managing the cost of deposit to manage our spread. When actually we had deep decline of spread in 2020, the spread came down from 5% to 3.7% in 2020. We managed actually the cost of deposit, and that's why the spread has again improved to 3.9%. And through this actually flexible and long-term strategy, we hope that we will be able to maintain our spread in coming years as well. Investment, it shows that investment is another major component in our asset. Most of the investment goes to treasury bill and bond, and we have also small investment in capital market. So investment grew by 16.8%, but on an average, our investment in treasury bill and bond was lower than 2020 because interest rate was lower in 2021. So that's why we didn't invest it much in most of the time in 2021. We invested actually at the last part of the 2021. So that's why actually considering the closing figure is showing the growth, but actually we on an average our volume was lower, and that's why you can see the income from investment was lower compared to 2020 by 23.6%. It was 3.7 billion taka, and which came down to 2.8 billion taka in 2021. Though we have actually higher capital gain from capital market, but as I've told you that we have actually not maintained very significant investment in capital market. So another core area of the Citibank is a trade business. Here you can see that how actually we are growing very fast in trade business that consists of export and import. In export, our volume has grown by 40% from $1.4 billion to $2 billion. And at the same time, import grew by 82.6% year on year, and volume increased from 2.2 billion to $4 billion. So altogether, we have handled 6.6 billion equivalent of trade business in 2021, and we manage 7% of the country's trade business. So it's a country's trade business increasing, but we are increasing much faster than the country's growth, and because of our excellent service and strong partnership with corresponding bank. We are actually offering much better service compared to our peer banks. So because of that, actually this in this area we are growing very fast, and because of that also the commission income has also increased by 45% from 3.9 million taka to 5.7 million taka. And also we had actually had a significant income from capital market from our brokerage. That is one of our subsidiary, and also our merchant bank, another subsidiary. They have earned actually significant amount from capital market as well. So combination of all this, actually our commission income has actually, commission and exchange and brokerage income has actually grown by 45%. Card business is also another strong pillar of Citibank. And here you can see that card issuing business, we have had a significant growth by 44%. Bill business also grew by 21%, which is the main source of income of credit card. And here you can see that the volume has increased from 32.9 billion to 40 billion taka. And the income from card business has increased from 1.5 billion taka to 2.1 billion taka with 33% growth. This is quite significant growth we have had from the card business. So revenue, which actually whatever actually I've explained so far, that it consists of the interest income minus cost of deposit plus investment income and other non-funded income. So you have seen that in every income area we have grown except interest income, but because of successful management of deposit cost, our revenue has actually in total actually increased from 17.7 billion taka to 23 billion taka with 29.8%, almost 30% growth. So this is one of the highest growth ever in the Citibank history in revenue. And if you compare with the revenue with our operating expense, which grew by 7.9%, so we believe that we could manage a moderate increase in operating expense, and which in terms of volume, it has increased from 10.1 billion taka to 10.9 billion taka. So because of very higher revenue growth and moderate expense growth, our cost to income ratio has come down from 57.1% to 47.5%. So the operating expense actually basically consists of two major components, that is the staff cost and other operating costs. Staff cost has increased because our business volume has increased. We have given increment, and we have recruited around 500 new people. So because of that, our staff cost has increased by 15.6% from 5.4 billion taka to 6.3 billion taka. But on the other hand, because of successful cost management and cost reduction scheme, our other operating expense has declined from 4.6 billion taka to 4.5 billion taka. So even when we had on an average 5.5% inflation, we could manage our operating expense with no growth. So, so here actually you can see the summary of the operating profit. Actually, after deducting operating expense from the revenue, we get the operating profit. And here you can see that with higher revenue growth and moderate operating expense growth, we have ended up with very high operating profit growth with from 7.5 billion taka to 12.08 billion taka with 59% year-on-year growth. So it's definitely very high growth we could actually manage. And from operating profit, then we deduct a provision against debt against loan. So because of most of the moratorium period is over, and we have come back to our normal NPL regulation regime. So our NPL ratio has increased from 4% to 4.9%. In volume, it increased from 10.8 billion taka to 13.9 billion taka. And because of that, our provision has increased from 611 million taka to 2.5 million taka. But we have kept additional provision of 1.8 billion taka. So with that, actually, we are still maintaining very high provision coverage ratio with around 90%. As per regulation, 60% provision coverage ratio is more than enough, but we are maintaining 90% provision coverage ratio. And we are really hopeful that we could manage the upcoming risk with this kind of provision coverage ratio with also additional provision. Now the profit after tax, after deducting provision, our profit has reached at 5.4 billion taka from 4.3 billion taka with 25.9% year-on-year growth. So this is the highest ever profit in the Citibank history. So definitely 2021 is a very significant year, even after going through several challenges. So here actually you can see that so far we have shown you this consolidated profit and loss profit after tax. Here you can see profit and operating profit and profit after tax of parent company as well as the subsidiaries separately. So Citibank profit after tax was 4.7 billion taka with 18% growth. City Brokerage, they had excellent year in capital market. Their profit after tax was 383 million taka with 149% growth. Our Citibank Capital Resource Limited, which is our merchant bank subsidiary, their profit is 330 million with 99% growth. CBL Money Transfer, which is a subsidiary company in Malaysia managing remittance business, their profit had degrowth because Malaysia had actually several very long lockdown in Malaysia. So their transaction has declined. So because of that, their profit has declined to 29 million taka with 18% degrowth. City Hong Kong Finance Limited is a new 2.5 years old company, and within this period, they have actually entered into a profitable business. So their profit has those is a small profit, but they have started earning profit within a very short time with 9 million taka. So on a consolidated basis, our profit stood at 5.49 billion taka, almost 5.5 billion taka with 26% growth. So this is a major ratio of Citibank on a solo basis. So our return on equity is 15.8%. Return on asset is 1.2%. Earning per share is 4.4. Net asset value 29.3. NPL, as I've already mentioned, 4.9. Cost income ratio 4.86. And you can see that other liquidity ratio, AD ratio, LCR, NSFR, all are actually showing that we are having a very healthy liquidity all through the year. So earning per share after considering all this on a consolidated basis increased from 4.09 to 5.15 with 25.9% on a consolidated basis. Consolidated basis, our book value is 30.7, increased from 27.6. ROE on a consolidated basis has reached to 17.7% from 16.6%, ROA 1.4%. And after all this, actually, we have our board has proposed dividend for based on 2021 with 12.5% stock and 12.5% cash. Altogether, 25% dividend has been proposed by our honorable board, and which was 22.5% in 2020. So, this is the last slide. Our CRAR as a capital adequacy ratio was 14.2% at the end of 2021 on a solo basis, and on a consolidated basis, 13.4%. Here you can see that capital adequacy ratio has declined to some extent because of actually redemption of some of the Tier 2 bond. So we are in the process of issuing new 7 billion taka equivalent of a new bond. So when we will be able to actually issue this bond, our capital adequacy ratio will improve by around 2%. So with this, I would like to actually end my presentation, and after my presentation, our CEO will talk more about the Citibank, and definitely we'll have a question and answer session afterwards. Thank you all.
Thank you, Safina Ahmed Tori, and thank you also our AMD and CFO, Mahbubur Rahman, for such a crisp, short summary of how we did in the last quarter of 2021, and by way of saying that you also mentioned about the whole year of 2021, which is only logical. It's 8 to 10 minutes time I will take. Let me set the clock. Now, I basically would like to tell to all our honorable shareholders and investors that we are faced with very turbulent, challenging times due to income from interest earnings and from fee and commission going down due to circulars and central banks interventions, and also cost going up due to us increasing the salaries of lower level employees, again due to central bank's regulatory directive. So on both sides, we are battered by certain bad news, and also cost of deposit is also going up due to another regulatory circular, which basically says that term deposits or fixed deposit rates for the entire bank, individual customers' deposits, fixed deposits, term deposits will have to be matched with the rate of inflation of the country. So cost on both other operating expenses side and cost on also the fund source side, both increasing, whereas interest rates are decreasing, and which is reflected in the bank's overall net interest margin, or the spread, whichever you call it, coming down from 3.9% to 3.6%. So we have already lost 30 basis point in NIM, which 1% basically means around revenue of 300 crore taka. So 0.3% means already 100 crore taka income is gone. Is the fourth month of the year, because cost of deposit has increased from 2.5% to 2.9% due to fixed deposit rates matching up with the inflation rate. That basically tells us about our strategy that we must focus on lending, which is also other than corporate loans, which is credit card, where interest ceiling isn't applicable, where we can charge 20%. And which is also retail loan and also small and microfinance loan, where there is customers do not have the scope of pressurizing us to reduce their interest rate, meaning we can command a rate of 9%, which we cannot if it's a commercial loan or medium segment loan or corporate loan. Corporate loan rates are, customers are good customers are demanding very lower interest rate than much less than 9%. So that's one strategic intent of the bank. But good thing is that, ultimately all these businesses are used to be handled by different individuals with different mindset. It only helps that right now, at a very right moment, the bank has chosen our additional MD, Sheikh Mohammad Maruf, whom you can see on the screen as the Chief Business Officer of the bank, which means that now one way of thinking aligned with the topmost team of the bank will rule the interest rate game of different across segments. So that's a good thing. As I said earlier, different business unit heads used to think differently. So Maruf's elevation to the level of CBO really helps us with this turbulent, NIM management time, interest rate management time. And another thing is that, we need to do certain optimization of our balance sheet. Certain consolidation is not the word, I believe optimization or effective balance sheet is the word. So we are also, to minimize our expenses and to minimize our kind of meaningless lending into different areas. We are now looking for different lending units where, which are really cost heavy, whereas not much yield generating. So we'll be shutting down certain businesses as well. The overall, I mean to say that capital is not my issue anymore. We have done as a solo basis company 474 crore taka of after tax profit, which is 549 crore taka of consolidated profit after tax. So of which perpetual bonds dividend 30 crore taka has to be paid. So basically after paying 12.5% cash dividend, we will add 311 crore taka in our capital in the form of paid up capital and in the form of retained earnings. Plus also, as Mahbub said, we are launching a 700 crore taka tier 2 bond. Plus also, we are also working on bringing another, big international partner, as an equity partner. We'll see how the partner comes on board. So capital is not really an issue. The issue is, having right kind of balance sheet, which is really, yield giving. So that we are looking at, and for that, as I said, that we are doing optimization, and we are trying to manage, costs on both fronts. We must address the rising deposit cost. We must, keep it lower as possible, and we must not allow any further increase of any other operating expenses after the recent increase, which is applicable from 1st of April this month for all the banks in Bangladesh. Recent increase of lower level employees and lower level support staff's salary, which has added another 65 crore annually to the salary expense of the bank. I basically mean to say that it only helps that right now at this moment, we have provision coverage ratio of 92%, and also we have additional provision of 212 crore taka in hand, which is additional. So that also helps, and we have few accounts which is especially managing so that Citibank can maintain its NPL ratio between 4.5 to 4.89%. So additional provision will help. And I must say that one great thing here is that, COVID time, our customers used to enjoy a lot of, COVID deferral benefits, of which I have calculated this morning only, accurate calculation, 90% of our deferral book customers are paying fully regular. So total, 421 crore taka is only the COVID deferral or payment holiday enjoying book, which was 720 crore taka only last year. So overall, the outlook, if you mean to say, on the capital side, no tension. On the asset quality side, we are quite, adequately. We have kept additional provisions of 212 crore taka as I am talking now, as of today. And on the strategy side, we need to maintain this balance sheet growth. We need to maintain these, commission income from LCs. We have done $6.5 billion of, LCs last year foreign trade. We need to keep up with that. And we need to really, the two major strategic pillars of this year will be, women banking. My honorable chairman says of every 2 people, there is 1 woman in Bangladesh. So we will really grow into women banking. And also we will, Asif, Asif, please listen. And also we will grow into women banking, and we will fully focus on City Islamic. Just Maruf, our CBO, is very much focused on these two areas, basically to bring in lot of more than Mahbub gave you the ratios of the growth of CASA accounts. It has from 36%. Now it's around 55% if you look at the entire bank's deposit portfolio. So CASA will further grow because we'll focus on women banking and we'll focus heavily on Islamic banking. So CASA mix will be there. We will keep the cost of deposits low. We will try to bring up the spread or NIM by focusing on cards and small and retail lending. We will also not really allow our operating expenses to increase further, and we will keep on doing non-funded income, real focus on non-funded income. NFI, Mahbub has said already to you that 42% non-funded income has growth, which includes the income from commission of LCs. So that all this will continue, and overall message is we started during my tenure 3 years and 4 months ago. I started with the goal of really scaling up, really spreading my wings, the bank of Citibank's wings across the entire Bangladesh by really doing agent banking and sub branch and through different other means. But now, due to the certain strictures with regard to interest earning, fee earning, and cost of operation rising, I think it's time to slow down. I think it's time rather to really optimize and to put money where there is revenue. So I think, I'm not saying that the bank's spreading its wings will be totally discarded and the bank will bring it or make it smaller in size. It's not that. I'm saying that we will now grow only very logically after extreme level of, extreme level of analysis where there is earning. Only there, where there is earning and there is quick bucks, will not forsake those opportunities, and we will grow rationally. We will not really spread our business dimension so much, because as I've told you that we are battered by many regulations which are all income taking, taking away a certain income of the bank and increasing cost. So now that I'm repeating myself, I will last thing I will say that Moody's have already said that the outlook for Citibank earlier it was negative, and Moody's has said that it is stable. So that is a great confidence should be great confidence for investors. And another thing is this revenue of the bank, which grew by 27% last year, whereas cost grew by 7% only. So you can have faith on us that we'll do something similar. And we have closed the year, last quarter plus the year, with a whopping 17.7% ROE, return on equity, which was only 8, 9, 10% or so when I took over as the CEO. So, and on a consolidated basis, bank's ROE is 15.8%. So we'll still be hovering around 15% by the end of this year. Thank you all. Thank you. My personal goal is to keep more provision, so that provision coverage ratio from 91% goes to 110%. So we're headed towards that. We are very cautiously moving ahead. We are keeping an eye on capital, on NPL and cost, and on revenue. So everything is in good hand. Our audits are over. Central Bank didn't have much to say about Citibank's compliance because we are a highly competent institution, and a new chief risk officer of the bank has taken over with a special focus also on green and sustainable finance. So that is going to be another core area of this running year, in addition to areas like Islamic banking and women banking. Thank you. Thank you so much. Thank you.
Thank you very much, sir, for your eloquent words. Ladies and gentlemen, we have now reached our question and answer session. I'll be reading the questions one by one, and hopefully our Honorable Senior Bank Authority will answer them within this stipulated time. So the first question we have here today is, how much of your portfolio is vested in the SME sector at 9% interest rate? Is it possible to grow in the SME segment?
Maruf. Maruf, speaker on koro. তুমি মিউটে আছো?
I think my MD has already explained the rates are capped at 9%. So apart from a credit card, entire portfolio is capped at 9%. So to answer that, entire SME portfolio is at 9%. And the question is, if there's scope to enhance it, of course, we have taken very strong measures, and we have hired a lot of people in that area last year. So we expect that the small segment portfolio, which is right now around 2,300 crore, which will go to 5,000 crore by end of next year.
Thank you. The next question we have is, what percentage of recorded interest income are accrued basis, not received in cash? What is percentage of relaxed loan portfolio?
Sorry, come again, Tori.
Sure.
Again.
What percentage of recorded interest income are accrued basis? What is percentage of relaxed loan portfolio?
Oh, we haven't taken one single taka of interest from the loan deferred portfolio, but Mahbub can elaborate on that.
Okay. Yeah, definitely. First, we haven't taken any interest income from deferred loan unless it is collected.
Yes.
So that is recognized on a cash basis. Another is as a part of normal natural business, certain portion of the interest is always in the receivable, because for example, the interest charge at the end of 31st December is not cannot be collected on 31st December. Normally it is kept, definitely it is kept under interest receivable. But as I've told you that interest income from the deferred loan is recognized as income based on cash collection. And so around 200 crore taka equivalent of interest income is within the receivable. So it is a part of a normal business cycle.
I think there was another part to it, that what is the percentage of total deferral loan
Right.
in the entire. I think that is the answer is almost to 25% of our entire loan book is under deferral, and I must mention that that almost 7,200 crore people. I mean, a portfolio of 7,200 crore avail that deferral, of which almost 50% was adjusted within last year. And we expect, and the remaining books are regular. We expect the remaining will be adjusted within due time.
Yeah. So to supplement, actually, CBO's actually answer, when actually we offered deferred loan, it was 25% of the total book, but it has come down to 3,500. So compared to our book size, it is now came down to 10%.
Absolutely. Thank you.
Now it's the 10% of the book is under still deferred.
Thank you. The next question is, what was Citibank's market share in foreign trade volume in 2019? 19, yeah.
19, I believe, Maruf, if I remember well, 19 was.
I mean, I think in 19 our trade volume was 3.5% to 4% roughly.
Yes, yeah. I remember 2.5 to 3%, maybe a little bit more than 3%, but last year the volume was country's total volumes around 7 to 8% of
7 to 8% exactly.
volume, 8%.
Okay, thank you. Moving on to the next question. NPL has been a major concern for the banking industry. What initiatives you have approached to mitigate future delinquencies?
MD?
No, Asif.
Yeah, that's a good question. Basically, NPL is in the pandemic situation, is everyone is worried about, but we managed that in a tolerable limit. Basically, the first action was the close monitoring and engagement with the customer. So we remain in touch with the customers, the relationship managers. On the other hand, the monitoring team and the relationship manager, the internal things, we have a fortnightly review of these accounts. We are having some problems in the repayment. So these went on in entire 2021. So in addition to that, basically, our repayments, we recovered that whichever is on cash realized basis, then we have taken into income. So altogether, we managed to keep the NPL ratio at the end of 2021 is 4.9%, which is below 1. Which is higher than the 2020. Because the 2024% NPL ratio was there, but it's mostly that was some of the benefit of the, the general moratorium period that helped to keep that low. But in 2021, the general moratorium has been withdrawn. Some specific moratorium has been allowed, which is ultimately ended up with only 10% of the portfolio. So when this general moratorium is no longer on the scene, having that in the normal classification rules, we could keep that within 5%, which is 4.9. And we anticipate that this ratio will be further improved and will remain within 4.5 to 4.9, something around that, despite having this pandemic and the post-pandemic situation.
Okay, thank you. We have some other questions. What's the strategy on cards? What's the strategy on loan recovery? If you may answer this.
Okay, I'm answering. I'm first taking the card question. You see, certain strategies were not mentioned just for the sake of time. I mentioned so much about women banking, Islamic banking, and for example, I mentioned about NPL management. But I didn't mention other or keeping the flow of the LC opening of $6.5 billion of last year. So, but certain things were not mentioned, like, for example, the key strategic moves of the bank is SAMD, Special Asset Management. Recovery, we have a large book of, return of book. We have a large book of around, 1,356 crore taka of, NPL book. So there are legal actions to be taken. So that's a highly important area in a year where, net interest margin is dropping and we need to earn more. So that is a core area. We have an SAMD head and we have a legal head of the bank. That's a team working, both of them working with the acting CEO of the bank, Asif Siddiqui, whom you are seeing on the screen. So that's a very core strategic area of the bank, just like, others that I mentioned. Like other strategic area I didn't mention is the digital move of the bank, because now is time, we are doing digital nano loan, but we need to do digital retail lending through our CityTouch internet banking. We need to launch our new CityTouch. We need to do home loan from CityTouch internet banking. So it's not to say that we don't have a strategy on recovery and special asset management. We do have that. We have a huge target of around recovering around 200 crore taka or so in this current year from our already loans which has gone bad and which has been written off. And to coming back to the card strategy, another thing which I didn't mention, I just said that card gives me, or card gives our CBO more than 9% interest rate. That's the only product where interest rate is 20%. So meaning that entire focus is going to be on cards by launching virtual credit card in a strategic manner, like the pay wave you see in abroad. So card will be inside your phone in a virtual manner, and we will be going aggressively on QR code like bKash has done. And also that means that we will be having soon, the market will be seeing soon few grocery card products co-branded with big grocery stores for our women segment. So these are few card strategies I just mentioned, whatever came to my mind, but really we mean it. We have been discussing this with the board. Only yesterday we have discussed the strategy with the Honorable Bank's chairman. So these are there. SMD is big part of the strategic plan. Card is big part of the strategic plan.
Thank you, sir.
As is digital. Simplifying account opening and giving retail loan and other responsible loan digital.
So I believe the next question we have is also directed towards you. What are the key strategies Citibank will be taking in the next 3 years? How would Citibank like to distinguish itself from other top-tier commercial banks?
Number one distinguishing factors of ours should be our service quality. So that we generate happy customers. We just don't keep on booking customers. So just only a few days ago, we have chosen new Service Excellence CEO of the bank, who is the DMD and Head of Corporate Banking, Nurullah, Service Excellence CEO of the bank. There are other 5 CEO positions below me, symbolical positions, which carries a lot of weight and lot of authorities in the institution. So, that is one distinguishing factors, and we will be distinguished separately due to our moves in the women's segment, Islamic segment, and also due to our moves in the card area and the most importantly, digital area. Those 4, you can say, will be distinguishing factors with an overarching distinguishing feature of, imparting customer happiness at every step that we take. So this is one. And on a 3-year strategic wise, you see when interest rate is, has been capped, and when retail loans are to be given at 9%, when costly small segment loans are to be given at 9%, and when the deposit rate is pegged with, fixed deposit rate is pegged with inflation rate, there you must be smart in terms of really not just, increasing your balance sheet, in terms of not just, increasing your scale, but in terms of thinking, what increase at what cost. So the strategy will be of not being as generous as we have been before, but being, coming into some sort of consolidation and full optimization of your balance sheet.
Thank you very much, sir. Next question is, what percentage of deposit is under inflation tagged rate? What are the business segments Citibank is going to shut down?
So first part, I can actually explain the percentage of deposit tagged with inflation. Around 27-28% of the deposit is tagged with inflation based actually rating pricing system.
It's only FDRs,
FDR, yeah, and around 27% of the FDR is tagged with inflation rate. And the second question was?
Second question was, Mahbub, like, which are the businesses, somebody has picked up from what I said about balance sheet optimization, which are the segments that we will discontinue with? This is very market sensitive, and this is very internal environment sensitive question. I am kind of restricting myself from answering it. We are toying around with different ideas, the segments which are taking a lot of time to take off, still in the runway, on the runway. Maybe we can just qualify with maybe. We are thinking we'll be having a big brainstorming session of the bank's top management committee and extended management committee, around 50 people of this 8,300 members bank, right after Ramadan and Eid. So there we'll take a fuller and final decision. I don't want to make industry or internal teams nervous now. Only few top members of the bank we have been toying around with this idea. So this is confidential. I'm sorry.
Thank you. Well answered. The next question is, as liquidity is depleting, how is Citibank planning to protect its interest spread within 9% capped rate limitation?
Maruf.
Thank you very much. It's a very, very, very interesting and very tricky question to answer. The reason being that, as you know, that government has given certain benchmark for deposits, and they capped the interest rate as well. In this very tight situation, Citibank is trying to maintain its reign through expansion of its deposits through its DFS platform, which is nano lending, which through its Islamic banking platform, because as our CEO mentioned, that we have launched Islamic banking and we are offering Islamic banking products from each of our branch. And top of that, through our structured and through the City Touch, which is the online platform of our retail banking, we are trying to expand and enhance the share of CASA account in our entire deposit portfolio. We believe that if we can keep on increasing our CASA portion in our entire asset or entire deposit, we can manage to keep the deposit cost low, and then we can manage to maintain our NIM, because in this current situation, what we are looking is maintaining the NIM, because it's very, very, very tough to enhance the NIM, and there are a number of interesting product, mainly depository product, which will be coming in the market in next 1 to 2 months time in our Islamic and DFS platform. Thank you.
Also, to add with our CBO, if you look at our presentation, especially the slide on spread, where you can see the math, our average yield is still 7%, not even 9%. So we can our yield can even go beyond 9% because we have credit card. So there is scope to increase the yield on advance. So that should actually manage the increase of cost of deposit in coming days.
All right. Thank you. The next question we have is the
How many
SMEs.
questions you have, Tori? How many more?
Sir, we have only 2 left.
Okay, sure.
Okay. The SME segment has increased significantly to 21%. What is Citibank's plan for SME segment for next 5 years? Any plan to increase SME share in the loan book?
Maruf.
I'm not sure in the last part, but let me start. I think in my first question I answered that, because we are looking forward to grow aggressively in the SME, especially small segment, and we intend to grow the book to double by end of next year. So I believe as the journey to diversify our risk in the different area, like reducing the corporate banking's contribution to the asset portfolio and enhance the contribution of small retail and card, it will continue. And I believe in 5 years time, the corporate banking portfolio is expected to come down to the tune of 40% by maintaining its current growth rate. But the growth rate of small retail and card will be much faster than their existing rate. And I believe by end of next 5 years time, small banking portfolio will contribute to the tune of 20 to 25% of entire bank's asset portfolio.
Okay, thank you. So the last question of the day is, what are the segment-wise NPL rates?
Asif.
I have this figure. Do you, if you, Asif?
Yeah, if you can.
Okay. So
Yeah, segment-wise, basically, in the our one of the best portfolio is actually corporate banking, which is just below 2%. And we have the SME. We have 2 segments. One is medium, another is the small. So small business, we have almost zero, which is 0.3% NPL ratio. In the retail business, we have 2.1%. On the cards business, we have 6.5%. And in the commercial banking, it's a little bit higher, which is 8.4%. And all together, basically, our medium segment, we have basically 17% NPL, which is we have many of the accounts which is inherited with our before the pre-restructuring of the bank. We're happy to inform you that we have done a restructuring in the SME medium segment business model from 2018. In the middle of 2018. So then what happened actually after that, our total NPL ratio of the new book from onward 2018 after the restructuring remain almost 0%. So all in together average is 4.9% at the end of 2021.
All right.
Average of the average NPL of the bank, entire bank is 4.9%. So that's the most important.
Sorry. I must add one thing for to eliminate any bit of confusion. When I mean the aggressive growth, I mean SME small segment, which our CRO mentioned that where the NPL is almost 0. That's the area where we are growing very aggressively.
And on the, just to add with the CBO, basically when we are growing in the medium, we are also growing in the medium, but we are being very selective. And in the last almost 3.5 years after the restructuring, we said the growth portfolio having 0% NPL. So the NPL we are inherited basically from the previous portfolio. We had some, some problems in the business model. We overcame that. Overcome that thing, and now it's.
Yeah, our NPL ratio of card and retail loan portfolio is below industry rates. and both are way below 5%, which is kind of we calculate based on certain maths as a tolerable maximum one. And as Asif said, the new medium segment loans of last 3 years hasn't generated one single, bad debt account. So restructuring has been done with the help of IFC 3 years ago of the medium segment, which gave us certain bad loans. So that's it overall. And I mentioned that provision coverage ratio is at 91%. We have a small, gap between the total NPL loan outstanding and the amount of provision we keep. 1390 crore versus 1253 crore, which we will cover soon.
Thank you very much. That was a very fruitful question and answer session. I believe it helped our stakeholders, our investors, and everybody related to Citibanks, and most of all our esteemed clients. So before I formally say goodbye, I'd like to request our honorable screen attendees to look straight towards the screen so that we can take a formal photo for our press.
Okay, I think it's done.
Thank you.
Okay.
Thank you.
Thank you. It's going to
So
take
we have
place,
reached
inshallah.
towards the end of today's earning disclosure event. Thank you all for your participation and patience. Allah Hafiz and stay well.
Okay, thank you.
Thank you.
Thank
Thank
you
you,
all. Thank you
Mahbub.
very much.
Thanks, everyone.
Thank
Thanks
you, everyone.
for